my shows are beginning to open with me giggling. I'm going to have to change that around. Anyway, good afternoon. Well, it's certainly better than crying. Good afternoon, ladies and gentlemen. You're listening to Financial Survival, sponsored by Discount Gold and Silver. And yes, that's me, Melody Cedarstrom. And today is Friday. You can always tell when it's Friday. Friday, January 30th, 2009. And what a month it has been. I mean, it's just like just yesterday. I was glad the holidays was over. Now we're here looking to welcome February here in the next couple of days. So thank you for joining us today. And, folks, it's Friday. We need your questions every day, but particularly today, although we do have quite a few. Discount Gold and Silver at yahoo.com. Discount Gold and Silver at yahoo.com. So come on, folks, think of some great questions. Think of some new questions, some different questions. And, of course, you want to give Discount Gold and Silver Trading a call for all your gold and silver coin needs. And you know what? I'm going to say this. I've got the best customers in the world. All the people who call me and all the customers today and every day, I am so truly blessed because there's just a wonderful, great bunch of people that are out there looking to preserve their wealth, and they call me to help them do that. So I'm very thankful and very blessed, and it just makes my day. And so thank you. And also Chapman, who also makes my day when we talk to him every Monday, Wednesday, and Friday from the International Forecaster, Robert Chapman. Good afternoon, Bob.
Good afternoon, Giggles.
Oh.
Well, I tell you,
as long as I don't lose Gold Diva.
Well, that's true. Gold is up 23.20
I
in the
forgot to do
outside
that.
month.
I forgot to do that.
Well, you don't have to. I'll do it for you. 23.20.
Thank you, Bob.
And I'll give you the whole price in a minute. And silver's up 50 cents. And let's see what we got here. Let's see, 42 and 118. That's LIBOR for 1 month and 3 months. I wanted to write that down so I wouldn't forget it. The market closed, it looks like it's closed, at 8,000, off 148 points. And they rallied it back at the end just to close it at 8,000 even. That's the work of our government. They tried all day to make it look better, but they were unsuccessful. There must be pretty heavy selling out there. For this month, which is now over, from a business point of view, the S&P was down 8.6%, and the Dow was down 8.8%, the worst January in history. And there's an old adage in the business, of course, that CNBC is not talking about right now that says when January is down, the rest of the year is going to be not so hot. Anyway, they couldn't keep the yields down on the 10-year. We're getting a call here at 286. 2.86%. 2 weeks ago, it was 216. Yields are going up just as I predicted. And the 2-year is a 0.95, and that's up. I forget what the low was. I think it was around 4.0 or 4.8. And, the Fed is supposed to have a handle on that market. They obviously don't. And I think it's, first of all, I think that the Treasury and the Fed are lying about the Treasury issuing bonds, handing them to the Fed. The Fed is making money out of thin air and handing it back to the Treasury Department, which in turn funds all these nefarious programs that they have. And that is immediately monetized, which means it flows right into the marketplace and right into inflation. So as I said, March and April, we get about 10% inflation right now, down from 13 and 5/8. We're going to see more inflation and hyperinflation, which I call anything over 15%. I know historically they've called it over 50%, but in this day and age, I don't agree with that. Besides, we're getting phony figures anyway. And interest rates are moving higher. And we said it'd be a 4% on the 10-year by the end of the year. It's 2.86 right now. As you know, we called a turn on Monday. We said Monday and Tuesday would be down, and Wednesday would be up. And we were right, because of shenanigans the U.S. government and the commercials on COMEX were playing, in particular, with gold. Now, you've seen, I said gold would go up. Well, the last 2 days, let's see what it went up here. We got 23.20 today, and yesterday we had 19.30. So what's that? 40 points in round figures. They did bang the big gold stocks today, and they should have been up. I say Agnico should have been up probably around 4 points. It was off maybe half a point on the day. Great time to buy, incidentally. And the same thing, of course, with the coins, which Melody will get to in a minute here. We're up 23.50 right now and 51 cents. Market continues to move higher in gold and silver. Anyway, they got a piece on Harley Davidson. Looks like Fitch is going to cut their rating. We went short in Harley at $54 or $58 a share. It's trading at $12. And I did that based upon the fact that they were selling motorcycles to people who couldn't afford them. And they must be getting a slew of them back. And it worked out that way. Harley will be lucky if they stay in business. And I don't think they're going to be buying many new motorcycles in the environment with which we're facing. So we've covered the market. The dollar probably was up slightly today. What do you got in the USDX, please?
Up 0.50, about 85.97. I saw it touch 86 just a little bit ago, but it looks like it just can't bump over there.
Well, they're hitting the euro, and the reason why is at the next meeting of the European Central Bank, they're not going to lower rates, and they really should, but they're not going to. They won't do it until March. And actually, the European Union intrinsically is not too bad, but they're exporters to each other, but to the world, and that's what's hurting. And anyway, we got a lot of questions here today, and I'm going to get right on with them. I have let me give mine first, and I'm going to do them quickly. The Davos, Switzerland meeting includes heads of state from the major powers of the world. Do you think the U.S. is there trying to strong up foreign central bankers into dumping more gold for price depression? And the answer is, of course they are. But they don't have to be there to do it. They do it over the telephone and the email. And I think all of the gold holders, you really know what they want to do and what they don't want to do. And Germany won't be a seller, period. And France could continue to be. And quite frankly, I don't know that Italy has any left, because not only will they sell as they will leasers, so remains to be seen. And Spain has a little bit left. They can easily be talked into it. And there's a few other countries, but you're not going to see much. Who would want to sell gold when they know it's going higher? So anyway, that takes care of that. That's from John. This comes from Chris. He asks about, not he, she. Christina asks about a whole bunch of things. Gold confiscation. We've handled it 100 times on here. There is not going to be any gold confiscation. Period. There's not enough gold in the hands of the American public to make it worthwhile to make everybody mad. And even if they did, they know they're not going to get but perhaps 20 or 25% of it, no matter what the penalties are. So if they want gold, they're going to go to the ETF to get it. And and they're all professionals, and they'll say, look, we're going to give you dollars for gold, and that's just the way it is. And they won't think anything of it. They'll take the dollars and go look for something else to invest in. That's all. You often talk about gold and silver assets. I understand that gold is traditionally viewed as a place to preserve your wealth as opposed to make money on your investment. And that's true. Other than holding physical gold coins in your pocket, what other specific types of gold and silver assets do you recommend obtaining, and in what quantities in order of priority? Well, I think people should have coins first, and